Okay, sports fans, sometimes you show up and it's time to play the big game. It's not always the big game. In fact, a lot of the times it's just the regular old-sized game, but sometimes you really got to step to the plate. In this field, earnings season sometimes can become the big game. You want to know what's going on with everyone, basically, and there's so many sectors to cover that cover every market you could imagine. So you need to be able to really hone in and do your homework. I'm Cody from Wall Street Breakdown. Today, we've got an earnings recap. Let's all just take it in. This is going to take a minute. I'm going to list off all the earnings that we're going to cover today. If you want to skip ahead and take a look at just specific earnings calls, I understand, because today we're covering earnings from 14, I hope that's your lucky number, different companies that reported earnings today. So those companies are Caterpillar, McDonald's, United Technologies, JetBlue Airways, Lockheed Martin, Eli Lilly, PulteGroup, Novartis, 3M, GM, as in General Motors, AT&T, Capital One, CN Rail, and AMD. And that's not even all the earnings I looked at today. There was a grip of them. I mean, there's just a whole lot of stuff out there. Let's get right into it. Caterpillar earnings per share of $1.95 beat the street by 68 cents. Caterpillar went on a rip today. I mean, they were one of the reasons them and 3M had the best earnings calls, I think, from what the market thought out of these big companies. And I mean, the Dow was up 130 plus, and another record high it closed today for the Dow, and Caterpillar, big part of that. So EPS $1.95 beat the street by 68 cents. That's revenues of $11.4 billion, beat the street by $770 million. And that revenue number is up 24.5% this year, year over year. Adjusted 2017 forecast from $5 roughly earnings per share to $6.25 for the year. They expect the construction business to jump about 20% and the mining business to jump potentially 30%. Now, these are obviously estimates on Caterpillar's part, but the forward guidance from Caterpillar looks pretty good. Higher sales volume and continuing growth in China are, of course, really helping Caterpillar along. They're having a stellar couple of years, but I mean, this year everybody's up, and Caterpillar is definitely one of those companies that's really getting the benefit. They close the day at $138.24. That's up 4.98%. It was a fantastic earnings call from Caterpillar. There's just no two ways around it. This is a good way to get started. I mean, that's for sure. McDonald's. McDonald's earnings per share of $1.76, that missed the street estimate by 1 cent. Revenues of $5.75 billion, beat the street though by $10 million. That's off on a revenue number though, year over year, 10.4%. They had U.S. comparable store sales growth of 4% and global comparable store sales growth by 6%. So McDonald's is still out there growing, but it's not exponential growth. They're definitely one of the blue chippers now. They're not a growth company as much as they used to be. They're just far too saturated. Finish the day at 163.88. That's up 0.33%, because I mean, they're good numbers. They're good comparable store sale numbers in the US and globally. I mean, that's what you want to see ultimately, but it's not. I mean, there isn't going to be that massive growth out of McDonald's anymore. I don't think we're going to see that. United Technologies, earnings per share of $1.73, beat the street by 5 cents. Revenues of $15.45 billion, beat the street by $470 million. That's up year over year by 6.3%. Some of the segments that are up is Otis up 5%, the climate controls and equipment up 6%, Pratt & Whitney is up 10%, and the UTC Aerospace was flat. So, I mean, they definitely want to be growing that, but United Technologies is constantly mergers and acquisitions. They're out there doing stuff all the time. So even an earnings call like this, which I think it's pretty significant, still 6.3% up revenue year over year, is good numbers. United Technology today closed a dollar or $119.74. But was off from what they started the day at by 0.95%. So I mean, it was one of those days where while the Dow was up and we had a lot of really, really good earnings calls, it seemed like a lot of the companies that even reported pretty good calls where like they beat EPS, they beat revs are up year over year. It seemed almost like only the real big ones that popped the market were the ones that were really driving it. A lot of these other companies, it seemed like they kind of fell off a little bit, even though I thought a lot of their earnings calls were a lot better than actually I expected. When you had this many in one day, I was expecting like, okay, we're going to get 4 stellar earnings calls, maybe one out of the park you never expected, and then you're going to get, 8, 10, where it's just, things just aren't what they should be. But this was actually a day full of great earnings. United Technologies, it didn't pop them at all. JetBlue Airways, earnings per share 55 cents, beat the street by 2 cents. Revenues of $1.81 billion, that was in line with what the street estimated. That was up 4.6% year over year. Operating income was down 12% though. Passenger revenue per seat mile down 0.4%, and the carrier cost per available seat mile, that was up 5%. So that's costing them more, and they're losing more per actual passenger seat mile. So this not a great earnings call, despite the revenue number being up 4.6% year over year. JetBlue Airways closed the day 2062, up 372. So 3.72% to be up on an earnings call that is marginal. And then when you take a look at a Caterpillar or McDonald's or United Tech, Caterpillar was up, at McDonald's, United Technology, some of the ones that are coming up, it doesn't make the kind of sense to me, but it's the marketplace that we're Undertaker, bro. For real. Got to get some water in here, honestly. Lockheed Martin earnings per share, $3.24. That missed by 2 cents. Revenues of $12.17 billion. That missed by $640 million. But the revenues are up 5.4% year over year. Again, Lockheed Martin, just an unbelievably good company. The aeronautics department up 14%. Missiles and fire control up 3%. Dude, I want to have a segment in a business I own just titled Missiles. I want to have that you open a file of decks and you're like, oh, here's last year's taxes. Here's the vet bill. And oh, that's missiles. There's the missiles file, of course. Why wouldn't there be? Missiles and fire control up 3%. They repurchased 1.6 million shares in the quarter and $522 million paid in dividends. Lockheed Martin is a fantastic company. Licensed professional financial advisor, you know what I would recommend for you, but they're United Technologies and Lockheed Martin, both great companies. Anyways, Lockheed Martin closed the day $313.15. That was off by 2.36%. Again, a good earnings call with a pretty decent year-over-year revenue bump. A lot of segments up. Missiles up. Honestly, the missiles were up. That in and of itself can't get you a good day on the market. Not even when the market's up so significantly, but it was one of those days. Like I said, Lockheed Martin, though, I think that's an excellent earnings call. And other than JetBlue so far, I think we've covered 4 out of 5 really good earnings calls. Eli Lilly, earnings per share of $1.05, beat the street by 2 cents. Revenue of $5.66 billion, beat the street by $140 million. That's up 9.1% year over year. Humalog up 9% in sales. Forteo up 13% in sales. Trulicity up 117% in sales. That's one of their emerging drugs. But Cymbalta down 42% and Effient down 56%. So some of the really established drugs taking a big hit over at Eli Lilly. Eli Lilly closed the day at 85.17. That's down 2.31% on the day. I thought that Lilly call's not bad. The rev number up 9.1%. You gotta like that, right? Like they're showing that in an economy that's growing substantially. It's growing substantially, United States, and they're heavily entrenched in the United States, that they are still keeping up with the growth of the economy, even though some of these bigger name drugs, Cymbalta, Effient, some of these drugs to be falling off so significantly, that's not going to look great in the long run, but to have like the Trulicity on the way, and I mean, they're obviously hoping it takes hold to some extent, up 117%. That is, that's something. That's something to look forward to. Lilly's still a strong pharmaceutical company. Another really good company. Licensed professional financial advisor. PulteGroup, one of the biggest home builders in the United States, reported earnings per share of 60 cents. That beat the street by 1 cent. Revenue of $2.13 billion, missed by $170 million, but that's up 9.8% year over year in the revenue number, and that's because they're doing great. Houses are selling fantastically in the United States, and again, the economy is up, so deliveries up 2% year over year. The ASP's up 7%, so that's the actual sales price up 7% to $399 per house. So $399,000 is a lot of money for houses, especially in the U.S. with how much a dollar costs comparable to Canadian dollars. But that PulteGroup is not. They're not your average home builder. This is definitely one of the leaders of the marketplace. Net new orders up 11%. Value of orders up 23%. That is a significant jump. 10.4 million shares bought back. That's the PulteGroup is just solid. I mean, I love home builders. Home builders, I think, it's a great way to really judge the economy. I'm always looking at what home builders are doing. I think quarterly earnings from home builders are some of the best indicators you can have of where things are going. We continue to see these up. We've seen them up last quarter. I like to see this. This is good, continued signs of growth. The cost of homes are going up, but the sales are going up as well. I know credit is a little bit easier to get right now. It might be a little bit easier to get for people, and I do understand that. Okay, so there's always that caveat that, you know, people are able to get credit a little easier. You wonder if the market turns and interest goes up, and you never know, right? Like how much we're on the actual table foreclosure wise, and that always becomes like that's always a concern in an up economy, that when things turn, how over leveraged are a lot of people? I mean, you're going to have a ton of people living paycheck to paychecks that are leveraging, I mean, everything, right? But the home sales in and of itself, I'd like to see this as we move forward here with the home sales, as we get more of them. The PulteGroup obviously first off the board here for the big home developers in as far as earnings season goes right now. So, but we're definitely waiting on KB and a bunch of other people to really tell us what's going on as a whole. I know PulteGroup was slightly affected, Florida, Texas, some of that stuff, but it wasn't so much that it hurt the earnings call at all. Moving on, Novartis, another big pharmaceutical company, earnings per share of $1.22, beat the street by 4 cents. Revenues at $12.24 billion, missed by $30 million. That's down 1.8% year over year on that revenue number. They've got a lot of drugs that are doing all right, but they're not taking off like mainstream, right? So you've got Entresto that's up 142% in growth, Promesa that's 35%, Cosentyx, something like that. It's like 85%. I mean, we've got Alcon, that's one of the bigger ones, up 6.3%. So I mean, they're moving ahead well, but Novartis just isn't. Every time I look at them, I just don't feel like they're on that same level, even though an earnings call like this still says that a lot of stuff is growing. I mean, in the pharmaceutical industry, just as Novartis is not one of the big movers and shakers. I would say that while an earnings call like this is fantastic, it definitely shows that if you're in this, you're probably not in a bad company by any stretch of the imagination. If you weren't in this already, and you didn't get in this through an ETF or didn't get in this through some sort of a mutual fund or an index or something like that, not the best of breed. That's just kind of what I'm putting out there. Great earnings call, good strong company all the time. Closed at 83.13, that's down 3.24%. Good company, not best of breed in the pharmaceutical industry at all. 3M, the other big earnings call of the day that really bumped. Undertaker water. I mean, right? You got to have this. Earnings per share of $2.3 or $2.33, beat the street by 12 cents. Revenues of $8.17 billion, beat the street by $240 million. That's up in revenue number 6% year over year. And for 3M, that's a big revenue growth because, I mean, their big stuff is big already and it's big everywhere. Growth is not something that 3M is. they're pretty steadfast. So growth 6%. I like to see that. Organic local growth up 6.6%. They do a lot of share buybacks and stuff like that, right? So they returned $1.1 billion to shareholders via dividends and share repurchases. They up their guidance going forward, and for a lot of people, because what 3M already is and where they are in every marketplace, you take a look at this, that revenue number up. I mean, they beat by 12%. They're a fairly predictable company, and this came out to be a not very predictable type of an earnings call just based on the beats alone. 3M, $234.65 to close the day, up 5.91%. That is huge. They're a massive company. That is a big number on a big share price. That kind of 6% jump, that pushed the Dow up heavy between them and Caterpillar. So that's a big earnings call from 3M. So GM, on the other hand, General Motors, they actually... They didn't have the worst numbers I've ever seen for GM, but I mean, like, you got to take into consideration how much they've pulled back on what they're doing. So earnings per share of $1.32, beat the street by 19 cents. Revenues of $33.62 billion, beat the street by $950 million, but that's off 13.6% year over year. Cash flow of $1.1 billion versus $6.1 billion a year ago. That's not good. That is a bad number, GM. North America EBITDA, $2.1 billion versus $3.6 billion a year ago. International EBIT, $300 million versus $200 million. That's at least a little bit of growth. GM Financial EBIT, $300 million versus $200 million. Again, a little bit of growth. But then you take a look at the, they closed the day 46.48. That's up 2.95%. So GM up after a call like that, but United Technologies off 0.95%. I can't explain that. I can't explain that to you. I don't know how that exactly works, but apparently it does. AT&T on the cusp of merging with Time Warner and making just a massive conglomerate, came in with earnings today. Earnings per share of 74 cents. Missed. You don't get to beat that easy just because I make a mistake. You missed by 1 cent. Revenues of $39.67 billion, missed by $450 million. That's off 3% revenue growth year over year. So we don't like to see that. Revenue dropped because of the declines in legacy wirelines is what they said. So, I don't have a wire line here. I mean, I would imagine more and more people are getting rid of that. So that's going to hurt a little bit because AT&T does not grow at the level that T-Mobile does. I mean, they're one of those companies that they're moving through customers on a much bigger attrition level than a T-Mobile is, right? So when you compare, it's not really the same kind of comparison. Business Solutions down 4%, Entertainment Group down 0.6%, Consumer Mobility down 6.3%, International growth up 11% though. The 3 million total wireless net adds on the phone churn at 0.84%. That's actually their best ever. They closed the day at 34.86, down 1.11%. There is kind of a justifiable drop. Intraday, I mean, we're not playing intraday nonsense, but it's not the greatest of earnings calls. I mean, AT&T still doing a very good job. It's a great company to own. Don't get me wrong. If you own AT&T, you're not in any kind of danger of owning just garbage, right? So licensed professional financial advisor, if you're going to go out and do any kind of investing of stuff you don't already own. But if you do own AT&T, this kind of earnings call doesn't make me feel any more trepidatious about anything, right? AT&T is doing a stellar job. Some of the numbers aren't where we want them to be, but this is almost par for the course for them, and they're still a very, very strong company that seemed to return a pretty good gain on any type of up market. AT&T is still doing well overall. I would take an earnings call from a telecom company like this, as especially the leader in telecom by so far. And I think DirecTV added 360,000 and lost 300,000, so a little bit of an ad there. So I mean, that helps out a little bit as well, right? So Capital One had earnings today. Earnings per share of $2.42, beat the street by 27 cents. Revenues of $6.99 billion, beat the street by $180 million. That revenue number is up 8.2% year over year. That EPS number is versus $1.90 last year. This is $2.42. So that they're not only bringing in the revenue, but they're bringing in the earnings big time year over year. Loans are up 3%, card loans are up 8%, auto loans up 3%, home loans down 5%, but Capital One seems to be doing everything right. That's a lot of up numbers. Capital One closed the day 89.52, down 0.22%. Yep, there you go. There you go. It doesn't make a whole lot of sense, but it is what it is because, yeah, intraday trading just isn't the way it is, right? So we don't worry about how the market fluctuates in the short term because as we look at this consistently, we just reaffirm that while you could have a fantastic earnings call, when you're being compared to other companies like yourself, Capital One, that's growth. I mean, that's growth in a fantastic way. Again, we're talking about people getting more leverage when the economy's up, but a company like Capital One flourishes off that. I think it's probably near the top end of where I would invest at the moment anyways, but it's still a very good company. And if you see the economy continuing to go this way, especially in the very long term, which it very well could, I'm definitely not saying it's reaching any type of plateau. We consistently see that it's doing fantastic. So if you think it continue to go, Capital One could be out there giving out loans for a while before we see anybody defaulting on anything. CN Railway up here in Canada, earnings per share of $1.31, that's Canadian, missed the street by 1 cent. Revenues of $3.22 billion, that missed the street by $60 million, but that's up 7% year over year. They closed the day at $83.14, that's up 1.66%. It's a railroad. I mean, if you own a rail company, you know exactly what you're getting. I mean, Ackman's not coming up here again to save CP. It's the same thing you always get, basically. I mean, there's not going to be any kind of exponential growth, but for the most part, it's a fairly steady racket if you don't have a strike or something going on. If you're already in CN, I can understand staying in it. If you're not in it already, getting into the rails is maybe, man, that might just be almost being too safe. It's just, it's great dividends a lot of the time. It's the growth rate is just not impressive ever to me. But it's really a matter of, like where you're at and what your portfolio allocation really dictates. So, I mean, again, licensed professional financial advisor, does CN Rail really jump my heart around too much? It doesn't, but it could do a whole lot more for you. Maybe you could read into it and see something I don't. Feel free to hit me to it if you do. AMD reported earnings. My God, we're on the last earnings. No, earnings number 14, people. Can we applaud ourselves? We're only 22 minutes into this. AMD Advanced Micro Devices reported earnings today. Earnings per share of 10 cents. That beat the street by 2 cents. 2 cents, you say, Cody? I do say. Revenues of $1.64 billion. That beat the street by $130 million. Gosh, that's a lot of dollars. That's up 25.2% year over year. That is revenue growth, my friends. The company's the graphics department, the graphics and computing department. I'm having a brain fart here on the last one, right? The computing and graphics department revenue was up 74%. There you go. Finally, you spit it out already. Why don't you? Enterprise, embedded, and semi-custom was flat. And the operating income was $84 million. It was $136 million last year for enterprise, embedded, and semi-custom. That is not AMD, while having a really good earnings call and the revenue being up significantly. I don't know. It's a bit of a non-starter for me. I take a look at this. I see where other companies comparable to AMD are, and I see AMD as a laggard still. I still see them as one of those. They're an also ran. Like they're in that pack of guys. They were $14.25 closing the day. That was up 1.06%. So people were looking forward going into this earnings call. After market, they're down over 10%. So you can expect tomorrow this earnings call from AMD is not going to be really well received because they're just there isn't the innovation over at AMD that I think people have been expecting for a long time, and AMD just continues to kind of putt along, and they're just not breaking down any walls like they once did to kind of get on the market, right? Like we remember AMD at one point in time was right there. This is the same old. This is kind of what we're expecting, and this is I mean, they're going to take a hit tomorrow. There's no question about it. That's earnings. That was earnings for Tuesday. My God, 14 earnings. We made it through it. A lot of companies did really well. I mean, we go back and look at the earnings. I thought Caterpillar, United Technologies, Lockheed Martin, Eli Lilly, PulteGroup. There was a 3M. There was some great Capital One. I thought there was great earnings, and I thought some of them were decent enough. I mean, Novartis, AT&T. There was some good, solid earnings today. This was an impressive day to do earnings. I'm happy to do 14 earnings. I hope this helps. I hope this at least is able to consolidate a little bit of your research. I'm Cody from Wall Street Breakdown. Please remember, before doing any investing, talk to a licensed professional financial advisor, and make sure you come back to Wall Street Breakdown and check us out. We do this kind of stuff every day, and we really enjoy having you. If you haven't already, click the subscribe button, notification bell, thumbs up for this video, thumbs up for all the videos, and leave us a comment. We love hearing from you. We want to know what you think. Have yourself a mighty fine day.